Okay, welcome to the Swing Trading with Cycles channel. We're going to do an update on uranium today. It is November 13th. I haven't done an update in a little while here, but I have been tweeting. It's just not looking very strong relative to the market, especially the miners, even though the metal itself isn't doing terrible. So let's go through this. We'll look at CCJ first, as we usually do, a proxy for the miners. And so we'll start with the daily chart. And as usual, definitely take a look at the links in the description. If you're not following on Twitter, you can see the previous videos to kind of catch up, get your context, and certainly familiarize yourself with Cycles 101. That is important context. I'm assuming you've already reviewed that content. So as we've been talking about on this daily chart, just to reorient you, the yellow line is the 200-day moving average. We obviously have this enormous gap here, which I drew this line and this line. So we gapped down, and now we've come back through the gap, and now we're actually retesting it as resistance. That's important, right? So like, let me draw this line just to kind of be clear here. So we had this big move down, right? And then we had this violent move back up. Then we had this move down, and now we have this move up. So now it's a question of where do we head from here, right? So to be clear, this whole move down, look at this giant gap again. So that was, October 11th, and then, October 12th, you woke up and we had gapped down massively, right? But then we consolidated for a couple of days, and then we made this move up. So that's what these numbers are the cycle counts. As we've been doing while we're within a daily cycle, sometimes the action can be a little bit murky. It certainly becomes clear in hindsight. So we are labeling things as they happen. And that's the key in general to my approach. That's very different from other cycle analysts. I'm not like, oh, we're going to have this high on this day and we're going to have this low on that day. I think that's BS. How can you predict that consistently? The answer is you can't, right? And so we watch the price action and we react. That's all we can really do. Our edge, though, is that we're looking on multiple time frames. So when we see something on a lower time frame, it's almost like a time machine, right? It tells us, oh, this daily signal is giving us a sense of what's going to happen on the weekly if we don't get a reversal. So all that said, we have this huge move down, right? So this entire thing lasts 15 days. So we have a little 7-day rally from here to here. I'll zoom in just to make sure that we see this all. So we have this little 7-day rally. That's what this 7 is. So we have a high on day 7. So whoop. And then we proceeded to fall, and we made a low on day 15. So this whole thing was 7, and then this was 8, right? 8 plus 7 equals 15. And then we rallied for 9 days. So we have this top here, and then we pulled back for, 6 days into another day 15 low. I hope you're following here, right? So like, this is a 8-day downdraft, 9-day rally, 6-day downdraft. So far, this has been, from this low, there have been 5 days. So Friday was day 5. Monday will be day 6. What you'll notice about this pattern, though, is that this is a lower high, right? This high is lower than this high, right? If I were to draw this out, like it would look like that. And this is a downtrend. We're starting a downtrend. I'll get rid of this line. And also pay attention to the gap, right? We had this massive gap down, and then this rally filled that gap, and actually then some, right? We went, like this line here is the top of the gap, more or less. And we went all the way up here where we have this big bearish daily outside candle on day 9. So this is price rejection, right? Another way to think about that is this is a false breakout. We were able to get above the previous high, but then we failed violently. I mean, look at this on this day 9, right? It looked like, oh, God, we're going back to the moon. No, we're not. Big downdraft. And then we actually had bearish follow through. That next day, we had follow through. Next day, we had what looked like it was going to be follow through. Then it ended up being consolidation. But then we got our lower low nonetheless. And now we find ourselves back where the gap was, right? This time, like, think about this. This is how you kind of think about what scenarios might look like. Are we doing something like that? Like that, right? That's what we want to watch for to give for our clue? Or are we going to do something like that? Maybe that, and then 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 that, like that. We can't know for sure in advance. which path we're going to take, but we can watch for clues as we get turning points to understand better. This shooter looking candle on Friday, certainly not promising, but uranium, like CCJ, has a lot of these upper wick candles. So this is just common to how it trades. Also notice we got just above the 200-day moving average and then we pulled back. You'll often hear people talk about the 200-day moving average as resistance on the way back up. I don't know that it's specifically the 200-day moving average necessarily, but it tends to coincide with other lower highs, like I should say swing highs that we need to conquer. So nonetheless, it is bearish, even if it's not specifically because of the 200-day moving average. The other thing to be aware of is Monday is very likely to be an inside day. How do I know that? Well, think about it, right? How does this candle close, right? This candle, I'll zoom in here, right? This is your Friday candle. Friday candle opened here. And then at one point we had this excursion all the way up here. Nice bright green candle. And then we pulled all the way back to close here, right? So we got all the way to 25.05, but we closed at 24.22, right? So we pulled back like 80 cents from the high. What that means is that price is most likely to open around the $24 area, right? Where it closed. But if our high from a Friday was 25, then that means logically we're going to most likely be inside the range from Friday. That is such an important concept to understand. A lot of alpha on this channel. That's definitely one piece of it. You can telegraph how the next candle is going to look, at least how it's going to open. We don't know. We could have a violent move where we break the low or break the high, but we can say with a degree of probability how the candle is likely to open. In this case, it's likely to open inside. And I just kind of illustrated that for you. I'll get rid of some of these lines so that it's easier to see, right? So we have this range on Friday, right? Again, so the range is that high of 25.05, and there's a low of 24.22. Actually, so the close was 24.44, right? So it's about a dollar range, and we're going to probably open on the inside. And then it's a question of, do we keep moving higher and break the high, or do we move lower and break the low? Now, just think about, like, look at where the candle closed, right? I should say, we look at where the Friday candle closed. It suggests that the Monday candle is going to open closer to the lower end of the range. That's not good. That's essentially setting up a bear flag, right? That doesn't mean we have to stay there. We could move up. The other thing is you can have a gap up opening. Some kind of crazy thing could happen over the weekend where we can gap up or we can gap down. So that's not a guarantee. That's why I say you can determine with some degree of probability here. But that's an important thing to know about, because we could spend Monday just kind of bouncing around inside, and then you can imagine a scenario where it's not till Tuesday that we get our final resolution, right? Like, let's imagine this Monday candle just closes like this, and you can see a world where Tuesday we get a candle that opens like that, let's say, and then just now finally decides its direction, or like that decides its direction. So we're going to want to be vigilant, and we're going to want to be patient. So that's the daily chart. What is the weekly chart telling us? So the weekly is kind of feeble. This is essentially this was week 19. So we're going to be starting week 20. This certainly has a look of a bear flag. We need to get above this high here. Where is that? So like you can kind of see this candle sticks out like a sore thumb. So that's a high at 25.94. So that can become a little price target to the upside, where you would expect some kind of resistance, some kind of reaction to that zone when we get up there. So we'll see. We're also below the 10-week moving average, so that becomes another kind of milestone that you expect that we're going to cross at some point. And if you think about the way the weekly candle closed, will probably be an inside candle just slightly. So the high from that week was 25.05. So it's the same kind of idea as a daily chart, right? We made a new high on that for the week on Friday. So that becomes our sort of pivot point for the weekly as well. As we think about, are we going to get a new high on the weekly, or are we going to get a new low? That's the same concept. Going back to the daily, are we going to get a new high, or are we going to get a new low? This sets us up for that same kind of pattern on the weekly. And if we look at the monthly chart, so this is November. We're building a pretty nice little lower wick here, but still a lot of trading to go in November. If you want to think about your most bullish scenario, November opened at 27.26. It's a red month right now. And so what that means is We need to go above 27.26 for the month to turn from red to green. That becomes a big milestone. That is like almost $3 from here, so that would be quite a move to end the month. But we do have 13 trading days to go, so that's important to know about. And the same kind of concept we talked about. If we end up not making much progress in the next couple weeks, we're probably going to get a December inside candle, like somewhere in here. So it's just an important concept. Anytime a candle presents itself with a lot of upper or lower wick, you're probably going to end up with an inside candle the next candle. And that should help you kind of scenario plan for the next few candles. And again, this is candles. I say candles because it could be monthly candles, it could be weekly, it could be daily, it could even be hourly. That's the multiple time frame analysis of all this, the edge. It applies on all the time frames. So you have to kind of pick your battle. So that's CCJ. We'll flip over to some other uranium names. Let's look at the actual Sprott Uranium ETF itself. So this tracks the price of uranium. So we will start with a monthly chart. Actually, let's start with the higher time frames here. So we'll zoom in. So monthly is also red, just like CCJ, but we did make a higher high, right? So we made a high above 1325, but we're now red, which means, as I always talk about, we're setting up for a bearish outside candle, right? Potentially. And these patterns don't necessarily have to complete on one candle. We could see follow through in December where, we imagine, we don't get much more move downside for this month, but then we get a December candle that opens like here somewhere and then kind of just migrates itself lower so that it completes the pattern for us that we could have completed this month, but it's just like almost like it just took a little extra time. So that's an important just general concept as well, right? That this bearish outside candle pattern could be a multi-candle pattern. It could be something that, doesn't play out the rest of this month, but then we get, the final resolution in December. And if we look at the weekly, so the weekly is definitely doing something of a little bit of a bear flag. Like, look at that. But it also sets up really clear levels. We got to hold above 1195, or that potentially sends us down to like lower lows, like in this area, and then maybe down here. So a move below 12 gets us down to 11, and then from there possibly 10. So like there's not a lot of sort of support down below. So we need to be vigilant for these moves. Yet at the same time, there does seem to be a little bit of a disconnect between the performance of the metal itself and the miners, which I know is frustrating a lot of people, which is why I like to look at things for their own merit in terms of charts. So let's look at some of those miners. Let's start with UEC, Uranium Energy Corp. We'll focus on monthly charts. So also red, just like CCJ. For UEC, the open was $4.28. So that's your pivot point. That would turn your month green versus the red that we have now. Let's look at Elevate Uranium. How are we looking? That is also red for the month. Elevate Uranium is actually coming closer to making new monthly lows. And you see I drew these arrows here. That's not a good sign. Those are swing highs that are building. And if we make a move below last month's low, so last month's low was 44 cents. If we make a move below that, that will make this another swing high. So I've drawn this in anticipation. And it then threatens a move all the way down to like the 35-cent area, which is a huge move percentage-wise. So not loving the look of this one. Again, this is your monthly chart. Certainly, if you zoom out and you kind of look at this looks like a bull flag, but it's a bull flag that could easily decline 10, 15, 20% before we get that move to the upside, which is kind of the general trend for uranium in general, that nothing to see here in a way. And that might be on account of us moving down into a 3-year cycle low. Let's look at Denison. So Denison is actually green for the week. But yeah, so Denison is green for the week. This certainly looks like a bear flag though. And I like to think about bear flags definitely with a degree of caution, because it's just a visual pattern. But I mean, look at that, right? That looks like a bear flag of this move down. So you imagine there's some spillover at some point. Now, people would like look at this line here and say, oh, well, we have to break this line. I say not exactly, right? I say what you're actually watching for is a break of the previous lows from previous candles. So you're really looking at horizontal levels. So in this case, that's a move below $1.12, which kind of opens the floodgates for a move, into the pennies below $1. And of course, if we were able to make a move above the high from this week, from like this consolidation zone around the 129 area, 130, call it, that could signal a move that we're going to try to retest this area here, like the 150s. So we'll see here. And the monthly chart for Denison is red, I believe. And this is just a general. But notice Denison is actually closer to going from red to green. So Denison opened at $1.28 on the monthly chart, and we're now a penny away from that. So this is a good example where this candle was red at one point. I mean, it still is red, but it's trying to go green, and we obviously have a lot of month left. So that's definitely interesting to take notice of. Let's look at a few other names here. So Energy Fuels. So Energy Fuels is green on the month. If we're talking about relative performance, that's the one, right? It's like if you had to pick names that you want to be in the ones that are showing relative strength, and this is definitely doing that. This is also making a new high on the monthly chart. Look at that, guys. Look at that, folks. So the high from last month was 761, and here we are at 770. That is a nice move. So UUU Energy Fuels is the one to be in right now. New highs on the weekly chart. That's really nice. Yet at the same time, if the entire sector is kind of sort of almost treading water, you do kind of question, why be involved in anything. But if you had to be, UUU could be the name. This is your quarterly chart, which is really promising. We need to move above $8.24 to give us a new high on the quarterly chart, because all of this is actually just consolidation inside the range from Q2. So if we look at that, what does that mean? Boop, boop. So as long as we stay between $11 and $4.76, we're still inside that range. Now, obviously, that's a huge range, right? Because it was a huge move down in that quarter. And so all we're trying to do is kind of get back to the right side of that. But that gives you very clear levels. That means a short-term trade could take us to around 11. We might expect some resistance there. We would want to be cautious and see if we get price rejection. But that's obviously a huge move percentage-wise. And again, we have a green quarter now. Also note that this quarter is actually inside the previous quarter. So this is a double inside quarter, right? This quarter is inside this quarter, and this quarter is inside this quarter. So your first breakout is actually above the high from last quarter, which is 824. So it's that same level that we kind of talked about. It coincides, which makes sense. That's the multiple time frame analysis angle of this. So Energy Fuels, I like Energy Fuels. Now I will caution, we are not going back to $240. No way. This is a $1 billion market cap now. And so you just have to think about that as well. There's been probably a lot of dilution here. So I wouldn't just expect a symmetry move back up. But at the same time, there is no reason why we couldn't retest like the $13 or $14 area. So you could see a double up here. But that's something where you want to kind of temper your expectations. But if I know a lot of people are sort of married to specific assets. If for some reason you're one of those people and you just have to be in something uranium, UUU is probably your bet. Let's look at URA. And actually, as we look at quarterly charts, right? So I'll just jump to CCJ really quickly. Notice it's very very red. That's a perfect example of your contrast. You want to pick your spots. Do you want to be in something that's a green quarter or something that's a red quarter? I know some people will say, oh, well, being in a red quarter gives you a chance for upside. Sure, you can take that approach. I say be careful trying to pick up pennies in front of a steamroller. You want to go with the trend. If something is already green, it's already making higher highs and higher lows. That might be the horse that you want to bet on. And if we look at the two ETFs, so URA, URNM. So we look at URA first. So that is green. That's looking more like UUU. UUUU, the 4 U's. And for URA, the ETF, a move above 24.34 would give us a new high on the quarter. And for URNM, that would be a move above 82.27. Wow, it's only down here at 70. So that would be a pretty big move. So when you zoom out and you kind of look at these, they don't look super bearish. I mean, it's not great to be consolidating inside a huge range like this. But again, it does give you the really clear levels, and I encourage you to definitely take a look, like, hands-on, pull up a chart, look at these names. That's the pattern that we're seeing. And again, it does give you a nice little North Star for a short-term trade. Let's see, anyone else we should look at? Let's look at Canalaska. So Canalaska, also an inside quarter, but notice it's red, and now it's a bit of a doji. So, and this is the OTC. So that's ranging between, call it 47 cents and 21 cents. So that's the common thing. Huge ranges for these things. But if you were inclined to play uranium, that at least gives you a concrete levels to lean on. So I think we'll leave it there. That was a good review of some names. We looked at Canalaska. We looked at UUU, Energy Fuels. We looked at the 2 uranium ETFs, URA, URNM. We looked at Denison, DNN. We looked at Elevate Uranium. We looked at Uranium Energy Corp, UEC. And of course, we looked at CCJ, as we always do. And we looked at the Sprott Uranium ETF. So a good smattering of names here. Not great risk reward, to be honest. And as you know, this is a channel where we look at all assets. We don't favor any specific assets. We're really just looking at trends. What are the best opportunities to make money? It's not about being right. It's about making money. If you're right as well, that's awesome too. So we'll continue to look at that, and I'll continue to provide updates on Twitter as well in real time. So definitely take a look. Definitely follow me there. But we'll leave it at that. Thank you for watching, and look forward to the next installment.